guys, today's video is going to be another trade review. I'm a little bit out of the loop because I've just been on a week's holiday to Egypt. I'm from England, so it's really nice to get away in the miserable months of January and just get some winter sun. As much as I enjoyed my time away, I feel like before I left I was just getting into the swing of watching the markets and dipping my toe into paper trading, so I'm really excited to get back to it. So today's trade review, I'm going to be sharing why I took the trade and how it played out. It was my fourth paper trade and it was for a loss, but my thesis was correct, so I'm really pleased with being able to identify the trade. I took the trade on the 7th of February, which was the day after I got back from holiday, so I wasn't expecting to take a trade so quickly as I was a bit out of the loop, but saw an opportunity and I wanted to give it a go. So I'm going to get into the charts. So it came up on my scan. It was a low float, so under 10 million float, which they're the stocks that I'm trading because they have scope for volatility. So it was a low float. It was moving on volume. There happened to be a pharmaceuticals company. So I went onto the 1 minute chart quickly just to see what it was doing that day. Let me zoom in. Here, this was the day, 7th of February 25. Big move here, gone for around about 1.3. Pre-market going up to $3.94, almost $4. Big move. And then what I did was I went over to the daily chart, which is this one over here, and I could see that it was a reverse split, which is this S symbol here. So basically, for a stock to be listed on the Nasdaq stock exchange, one of the requirements that it's got to meet is it's got to maintain a price of over $1. So what they can do is they reduce the shares outstanding while increasing the price of each share. So they're basically combining multiple shares into one in order to get their price up. And the float size then reduces, which means it's easier for them to move the price. So it's kind of the gist of it anyway. I'm still getting my head around that. So this is the day of the reverse split. Now before the reverse split, these prices will now not be accurate because they've done the reverse split. These prices are now skewed. If I click on that, it will show me that they've done a 1 for 100 reverse split. So before the reverse split, you would have to divide these prices by 100. So the price was trading at around 4p or something before the reverse split. So they were well under the $1 price, minimum price requirement to be listed on the Nasdaq. So it would have been in this kind of a compliance period where they've got 180 days to get the price above the $1 mark. So one of the things they do, as I said, is they do this thing called a reverse split, and they need to get the price over $1 for consistently 10 days. So you can see here, the day of this pump was day 10. So quite a significant day because the price before that closed at 1.58. So the next day their price dips below $1. They're not going to be meeting the compliance regulations, or if I don't know whoever monitors this thinks actually your price is very close to $1, it's not really convincingly over $1, they can actually extend the period of time that they need to maintain that price. So they really want to get it well above $1 to meet the requirements. So what they tend to do is, within that 10-day period, is put out some kind of PR to pump the price. And because it's now a low float stock, because it's done that reverse split, it can move quite significantly. So I could see on day 10 they were pumping the stock, if I go to, I'll quickly check the news. I can see on that day they had put out a press release. They've moved to a phase 2 of some AI drug development, whatever. But basically, they're putting out a press release to move the price of the stock. So that's that. So what I did is I looked back on the chart as well, just on the daily chart, just to see, have they got history of doing these reverse splits? Because sometimes companies do them like 3 or 4 times in the past, and you can then see how they move after a reverse split. So do they pump the price? Does the price actually move? You can kind of get a little bit of a history of the stock. But in this instance, there were no previous reverse splits. I went back all the way. So didn't have that, but didn't matter. But it is an extra thing you can look at if the information is there. So this is all stuff I've really learned from Roland Wolf. He talks a lot about this stuff. It is a little bit confusing, but kind of getting the gist of it. So you can see on the 1 minute chart, it was gapping up and it was holding this 250 level, which again, whole dollar marks, half dollar marks are really significant as acting as support and resistance often. So I thought it's probably a good trade to try and take it somewhere around, 260s or 258 and risk off 250. And I was trying to do it as a paper trade, as that's what I'm doing at the moment. But I realised I'd actually put in the order for it, but on TradingView you can't actually trade pre-market on paper trading. So yeah, that was a bit annoying, and I didn't realise that. So I put the order in. Obviously, it wasn't executing. I couldn't really figure out why. And then when the market opened, it executed straight away. So I got in there, and it immediately broke my risk level. So I was out of the trade straight away. But yeah, saying that, if I had waited till market open, I wouldn't have traded in this first minute or 5 minutes, because I like to see how it plays out. So I could have potentially got in here, and I put my risk at, my profit at $3, just where there was some resistance pre-market and also whole dollar mark, pretty important. So yeah, I could have got in somewhere around here and then risked off, rather than the two. Well, I could have still got in here and risked off my 250, or I could have looked at where it opened, where it went to, and I could have risked low of day. So if I had risked the low of day, I would have just had to have taken a smaller size, basically, because my risk could potentially be larger than I initially wanted. And if I had got in somewhere around the 250s or whatever and sold around my profit mark for 3, that's a 20% move, so really good profits that you could make there. If I held some, it went up to almost 370, so again, that's like 50% move that you could be making there. So pretty pleased with the analysis. I think the thesis was correct. Reverse split pump on day 10, low float stock, moving on volume, and other than breaking my risk a little bit, it did exactly what I thought it was going to do. So yeah, I actually lost $2.33 on this trade, but it's not really about the profits and losses at the moment. It's just about identifying the setups, setting my risk reward and trying to play them well, which I think I did okay on this. So there are dangers or things that I should be bearing in mind when taking this trade or any trade. One of them is that, is the market quiet or is it hot at the moment? And at the moment, when I took the trade, the markets were quiet, so that can affect the way a stock can move. It may not move as it would in a hot market. And also, this was a reverse split pump, thesis of why I took the trade. And reverse split pumps are not particularly hot at the moment, but there are instances where reverse split pumps are running a lot, or they're running a lot within a specific sector. So they're things that I need to try and gauge when I'm taking a trade, and then put my size accordingly, or my risk needs to be tighter, and so on. And the other thing is looking at whether the company has current or pending financing in place. So the company can dilute shares at specific prices, and that can be a real danger. So I'm going to need to sign up to something called Dilution Tracker, which is a paid service, and that will give me that information so I can take that into consideration. But it's not something I've done yet. So I've got a long way to go, but I am actually buzzing at the moment to be able to identify decent trade setups and kind of understand how they're working, or at least the basics of it. So rather than feeling overwhelmed this week, which is how I've been feeling most of this time, I'm feeling a bit more excited, and I can't wait for the markets to be open again on Monday. So thank you for watching, and I'll see you next week.